when we look at the price of gold, gold itself is warning us that the world is more or less preparing. It's telling us something bad is happening, and we're just waiting for that piece of news or that event, that kind of shoe to drop to cause be the name for the next financial reset, which I think is coming sooner than later. But you definitely don't want to fight this trend, and gold is telling us something bad is brewing. But you can't bet and try and pick a top, because this market climbs a wall of worry, and it can keep doing that for a lot longer than most people can stay solvent.
Gold is flashing one of the strongest warning signals we've seen in years. The global financial system is quietly preparing for its next reset. After months of consolidation, gold has broken out with powerful momentum, and the charts are screaming higher levels ahead. Technical setups, including Fibonacci extensions, are pointing to upside targets between $4,100 and $4,800, with short-term action hinting at even more gains in the weeks to come. Silver is also starting to come alive, showing signs of a sharp catch-up move with the potential to hit $49 to $50 per ounce before taking a healthy pause. Both metals are being driven not only by textbook chart patterns, but by strong economic fundamentals and seasonal tailwinds that historically favor precious metals during late summer and early fall. Chris Vermeulen, founder of thetechnicaltraders.com and one of the most respected market strategists out there, has consistently emphasized the power of trend following and momentum analysis for investors. His work shows how setups like bull flags and seasonal cycles give traders a chance to catch the biggest moves in gold, silver, and mining stocks. The key message is clear. Gold and silver have entered a high-probability phase of strength. Major mining stocks are already pressing near all-time highs, while junior miners, though still lagging, are building the perfect base for a major breakout. Momentum is on the side of precious metals. Investors who position carefully now have the chance to benefit from both the short-term rallies and the longer-term structural shift that's unfolding. Now, let's jump into Christopher's interview clips. But before we do, make sure you're subscribed to the channel and have that bell icon turned on so you never miss a critical update.
We'll probably tie into that, but I pretty much everything right now is pointing to higher pricing, going north on the charts, and it's kind of exciting. A lot of people are waiting for the Fed to drop the hammer to see what's going to happen, and then see how the algos and the big funds will react to it. But everything is looking pretty good at this point. There's a pretty clear chart pattern just using Fibonacci extension based on this low that we saw back in November 2024. We have the big rally up, we have the high, and then we have this pullback that we saw earlier this year in May. Using Fibonacci extension, we can get a gauge of where that momentum should carry the price of gold, which brings us to about 4,100, 4,800 or $80, somewhere in that range. And so gold is broken out of this big bull flag. It's starting to pick up speed, high momentum. So there's a lot of upside potential for gold here. And just looking at the short-term chart, there's some really nice momentum here. If we were to look at this from a swing trader's perspective, this rally up, this quick little hiccup back down to the 5-day moving average shows that potentially in 3 or 4 or 5 days in the next week, we could see gold run another about almost 5%, just based on this high momentum move, which would be very nice, and it would actually balance out the size of this big bull flag that has been forming all year. So we got this giant bull flag, which is you have a rally up, it creates a flagpole, and then you have the flag flagging sideways in the wind, which is a pause before it continues higher. So overall, when this breakout that we're having, the first kind of real resistance area, I think, could be right up here around that 3850 area. And that could happen literally, as you and I are speaking, like this week type of thing, or next week. I'm just looking at this most recent pattern. It's showing silver should run potentially in the next week or so to about 45 bucks an ounce. If we go and we look back at the monthly chart and look at the big picture of silver, silver has this tendency, which is what you just touched on, Kai, which is it can kind of be dormant. It can kind of lag for a little bit. Gold might take the lead, and maybe miners sometimes take the lead. And then suddenly silver will just like take off and play catch up at the last hour. I think that's likely what's going to happen here. I think silver all of a sudden is going to pop and take off. And I think we could actually see it hit $49, $50, maybe hit an all-time high in the next month or so before maybe we see a little bit of a pause and correction and the stock market has a reset. So gold and silver and the miners are all looking very strong. Not only are the charts on multiple time frames pointing to higher pricing, but as you mentioned, kind of the fundamentals, the economics, are also in favor. We have a really good tailwind, which is why I like gold here and why we've taken an added position in it. And really, if we take a look at this added layer of gold seasonality, Kai, you can see August, September through almost the middle of October, gold has a natural tailwind. It naturally wants to go higher on average every year. So a lot of things are lining up, telling us that gold should just whiz its way higher. It should be pretty effortless. And that's the joys of riding a trend. A trend should feel somewhat effortless. If you're trading and everything's going against you, it means you're fighting probably an underlying trend in the opposite direction. Right now, all the trends, including fundamental data, is favoring gold. On a short-term basis, when we look at the 30-minute chart, we can see, silver miners got into an oversold condition and they have just screamed higher. We're long SILJ here with our short-term sector strategy. When you look at the monthly chart, silver miners are up here trading near close to all-time highs for this ETF, going back as far as it did. When we look at the GDX, which are the large cap gold stocks, it's very similar. It's trading right up near all-time highs, or actually at all-time highs pretty much, telling us that I think we've seen a good chunk, a majority of the move for miners temporarily. I do think they're going to go a little bit higher. But what's interesting is the juniors haven't really, like the gold juniors haven't really taken off. They've had a very nice run, but they're nowhere near the all-time highs. And I do feel like the juniors are eventually going to have a really good window. I do think they are going to have a bit of a pause and pull back along with everything else over the next, 6, 8, 12 months. If the stock market does stall out, I think we're going to see everything have a bit of a pause. And for gold, silver, and miners, it's going to create a bull flag pattern, more or less. Wherever this tops out, we'll eventually see miners put in a bull flag, a launch pad, before it takes that next big run and shoots higher. And I think GDXJ and like the junior and microcap gold stocks, when we get to that market environment, are going to be a really awesome play. But right now, money has been going into silver miners, into the large gold miners, and not quite as much into the juniors. But they're all pointing to higher pricing, and I think there's quite a bit of upside long-term down the road. And I think near-term, they're going to have an explosive move. Gold, silver miners should pop. But I do think after that pop in the next month, they're going to probably start to go sideways and build a big bull flag pattern for down the road for it to have another leg higher.
The US dollar index looks like it's trying to bottom out, but it hasn't fully confirmed the move yet. Traders are already betting big that rate cuts are coming, and that pressure is pushing the dollar lower while sending bond prices sharply higher. Hedge funds and algorithms are front-running the Fed, arguing over whether the cut will be a quarter point or a half point. But here's where it gets interesting. This setup feels almost identical to 2007. Back then, the stock market was charging to record highs, even as cracks were quietly forming beneath the surface. Gold was already outperforming, and the dollar was left for dead, one of the most hated assets in the world. Today, we're seeing the same movie play out. Stocks are frothy again, led almost entirely by the Magnificent Seven. Gold is on a tear, and once again, everyone is calling the dollar worthless. But historically, that kind of extreme sentiment often marks the turning point just before a major reversal. When you zoom out to the long-term cycles, the message is clear. Precious metals tend to shine brightest at the very end of a bull market. Yes, capital goods are still performing strongly, and AI is driving record-breaking growth, but this looks and feels like the final phase of the cycle. If history rhymes, we could be staring at the setup for a major stock market top, a parabolic move in gold to fresh all-time highs, and then a violent rebound in the dollar as equities finally crack. Bonds, the dollar, and precious metals are all screaming the same message right now, and investors who ignore these signals do so at their own risk. All right, let's get back into the interview and see how this all ties together.
Yeah, the dollar index is trying to figure out if it's putting in a bottom here. It looks like a bottoming type of pattern, but it has not bottomed yet. More or less, it's kind of, I think a lot of people are thinking, there's going to be a rate cut, which could make the dollar lose some value. So that's kind of what we're starting to see. Is that I think that is the belief is there's going to be a rate cut. Usually the dollar is going to want to pull back. And if there's a rate cut, we're also probably going to see like bonds move higher. And if we take a look at bonds like TLT, you can see the last 4 days, bonds are just shooting higher. Everyone seems to be moving in, believing there's going to be a rate cut. And there could be. The question is it zero? Is it a quarter? Or is it half? We're just going to find out. But people are front running the news and trying to get positioned in for it. Of course, the news is going to hit. We'll probably see a pullback. But the dollar, people are betting on a rate cut, higher bond pricing, and they're expecting the dollar to fall, which will be interesting to see because, if we go back and we look at this chart, there's a comparison chart. The left one here, I'm going to go back to 2007 to the stock market high. We just go back here and I'll just zoom way in. So if we go back, the candlestick chart here, Kai, is the S&P 500 weekly chart. The S&P 500 was hitting new all-time highs just before it put in a major top and started to crash. Now, the yellow line is gold. And you can see we're in a very similar type of situation. We had a big pullback this year. We had a rally. We're pushing to new highs with stocks. 2007, we had a sharp pullback, and then we've had a rally. We're pushing to new highs. Well, gold for both of these timeframes are like the top performers long term. They are picking up the slack. Gold is performing very well. And what's really interesting, if we go back to this time window, on 2007, on the left chart there, we look at the Dixie, the dollar. It had sold off. It was one of the most hated currencies. Everybody says it's going to be worthless, blah, 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 all of that stuff. And then we come over here to where we are now on this other chart. If I get this to load here, and we take a look at the dollar index. Dollar index is back down at the bottom. It's one of the most hated currencies. Everybody says it's going to zero. So we have a very similar setup. Erase all the news, the Fed, the economic environment, and just focus on price action. We have a very similar setup. Stocks are frothy. They're being dragged up by the Magnificent Seven, so it's not a healthy rally. Gold's outperforming everything else. The dollar's the most hated. And, the markets really do move for the same reasons, no matter if it's a tech bubble, if it's a financial crisis like 2007 or whatever this new one's going to be here now. They sell off because people are scared and something bad is happening, or they rally because they're bullish and confident. So we have a very similar setup where we've seen before. We're seeing gold, silver, and miners come to life and outperform. This is what happens just before a major trend reversal. In fact, if we look at just the cycles in the market, usually precious metals do exceptionally well right near the top. We saw this in 2007 as well. And so this is an early warning sign. Industrial capital goods have been doing very well also. And it's interesting because when you come down and look at this business economic cycle, which I don't think I've shared with you on here before, but more or less we're in this this yellow cycle here, Kai, is the economic cycle, the business cycle. The blue one in the background is the stock market cycle. And again, the stock market cycle is saying precious metals are telling us something bad is happening. The stock market is likely to start to top out soon. This yellow cycle is the economic cycle. And if you look where we are right here, innovation and adaptation, we've got in the same time frame, this is AI. This is adaptation. Everybody's bringing in AI into all the businesses. It's spurring on tons of growth. It's dragging the stock indices up by the Magnificent Seven. And so we're just in this final phase. The economy is still growing and still has some strength, but the stock market already knows the end is coming. The music's about to stop. And it's having a game plan, being able to identify when has that music stopped? When do you need to change, pull chips off the table, or change your strategy or hedge your positions? So there's all this kind of interesting stuff coming into play, like the dollar and like 2007 and these cycles. I find it all really interesting. These are big cycles. These have to do with the whole kind of global economy. So they don't happen overnight. They take months, quarters, in some cases, years to actually top or bottom. But we're in the process. I believe we're on the homeward stretch to potentially, if we fast forward from 2007 and we just look at the price action, this is where gold shot up another 30%. The stock market fell 55%. And as the stock market tumbled, the US dollar took off. And so I believe we could see something similar potentially down the road. Stock market sells off. Gold has its final blow-off move to 4,100, 4,500 an ounce. Silver, I think, is going to hit 50 an ounce. The dollar is going to put in a bottom and start to rally as the stock market crashes. There's a lot of stuff coming to play. I probably just lost everybody, but there's a lot of really interesting things coming to play, which kind of just you need to be aware of.
Global markets are sending powerful signals, and they're all pointing to a massive transition ahead. This isn't just random price action or a few isolated moves. We are watching the early stages of a major capital rotation unfold right in front of us. Precious metals are breaking out at the exact moment stocks are showing exhaustion. The dollar index is testing historic turning points, and bonds are screaming that monetary easing is on the horizon. Put all of this together and it's clear. The system is preparing for something big. Here's what history teaches us. Investors chase stocks until valuations completely disconnect from reality. Then capital quietly rotates into defensive assets, gold, silver, and bonds, while most people are still distracted by headlines about record stock market highs. That's why gold and silver aren't rising on hype. They're rising because they're the last safe store of value when faith in paper assets starts to crumble. We've seen this movie before, right before past market tops. And while nobody can call the exact day or week, the pattern is unmistakable. We are standing at a critical junction. The next moves will be shaped by policy decisions, liquidity injections, and investor psychology. But the overall trend is clear. The market is exiting its late cycle phase. So here's the real question you need to ask yourself. Are you positioned for a world where equities could roll over, but gold and silver soar? Are you ready for a potential dollar rebound that could catch everyone off guard? Are you prepared to protect and even grow your wealth while others are still in denial? History is very clear about what happens to those who ignore these signals. They get caught on the wrong side of the trade. But those who act early, with discipline and a clear plan, can turn this transition into one of the biggest wealth-building opportunities of their lives. Cycles like this don't come around often, and when they do, they reshape the financial landscape for years to come. That's why staying informed and strategic right now is not optional. It's essential. If you're finding value in this analysis, make sure you hit that like button, subscribe, and turn on notifications, because the next few months could be some of the most important of this decade, and you do not want to miss what happens next.